Hi there. Solventum has the best presentation I've ever seen. Easy to understand, see their products, what they do, and to value this business quite easily. As you know, Solventum is a spin-off from the company 3M. And now this company has a market cap about 13 billion, close to 14 billion, and a price to earnings around 18. As you can see, the stock price was about $70 at the beginning and its IPO, then went down, and then up 53%. The best time to buy this company was when the valuation was much lower. But now you have to see if Solventum is still a great investment. So, if you read their presentation, as I said, the best ever I've seen so far from all companies I've analyzed, you can easily see their net sales for the last quarter and free cash flow. That's what you need. And you can also see their guidance for the full year 2024, where the revenue may increase a little, about 1%, and the free cash flow to be between 750 million and 850 million, an increase from 700 million. So that's great. That's great. Then you can easily see their segments and their products: MedSearch, Dental Solutions, Health Information Systems, Purification and Filtration. And here you can see the revenue, 1.1 billion, this segment, the largest segment. Dental Solutions, 300 million. Health Information, another 300 million. And Purification and Filtration, over 200 million. And under, you can see their growth rate: 1.5%, minus, and up 0.1%. Now, as you probably see, the total revenue for Solventum was 2 billion for the last quarter. And the growth rate is somehow flat. Better said, no growth rate. Just a small increase of about 0.4% for the total revenue. Now, you can take segment by segment, see again their growth rate, revenue, and why that revenue has declined for that specific segment. And in the right side, you can see their product, some of their products, what they sell. For instance, for MedSearch, they sell this peel and place dressing. It's quite useful and there is still demand for it. Then Dental Solutions, another product, clear fluoride treatment, which is quite needed as there is a lot of sugar out there, which affects our teeth. And fluoride is a great treatment. Then Health Information Systems, you can see here, they have a program, a platform, Encompass, which is a computer-assisted coding system, combines coding with their processes to create workflows. And then, lastly, Purification and Filtration for water. You can see one of their products here in the right side. Now, you can also see their guidance. They have increased their guidance, also their earnings per share, adjusted earnings per share, and most importantly, their free cash flow has increased in the latest guidance. So, if you want to value this business, which has a market cap close to 30 billion and PE ratio about 18, you have to look at the free cash flow and their future growth rate, the growth rate of their revenue. Because if their revenue grows, maintain their margins, also their free cash flow will improve. Now, you have to ask the question, how much will Solventum grow in the future? How much? As you've seen their products, you think of their market sizes for all their segments, you better see here, and think about their, or try to assess, to forecast their future growth rate. Based on the management, which know much more than us, the future growth rate for the full year 2024 is expected to be about 0 and 1%. That's the future growth rate for their revenue, all their segments. And you can see here, segment by segment, the past growth rate. Some of them went up and others went down. Then, for instance, Dental Solutions, a huge decline, over 5%. I wouldn't have expected this, but that happened. Now, another important fact to think about this business is when Solventum spun off from 3M, they also got, let me show you here, some debt, which is here long-term debt, 7.8 billion. 7.8 billion, you can see here in millions, 7.8 billion in debt. And the market cap is about close to 13 billion. Why is this important? 3M wanted to get rid of some of their debt. They spun off this company with their products. You also have to ask yourself why 3M got rid of this part of their business, Solventum. Why is that? Maybe because the growth rate isn't that high, it's flat, and they wanted to improve their margins, to get rid of some of their debt and maybe some employees to move it to this company. You have to ask those questions. Why that happened? Now, when you look at Solventum, it seems a stable business for the moment. And they're still making some money. As you can see here, the revenue was flat and their operating income has decreased a little, but most importantly, you have to ask why their earnings have decreased. And you see here, interest expense for the last quarter or for the last 9 months was about 260 million, or for the last quarter 107 million. So because of that debt, high debt of close to 8 billion, the interest they have to pay is higher. So per year, they will pay close to 400 million, or between 350 million and 400 million, only in interest. And when you assess that, you look at their operating income, which was about 900 million for the last 9 months, that's a drag on their final earnings. And also for shareholders, because the stock price depends on their final earnings and also their free cash flow. So if you try to value this business only on their free cash flow and assume that their growth rate will be flat, then the market cap may be between 8 billion and 10 billion based on their forecast, their guidance. But as their interest is quite high, their real earnings and free cash flow may be lower than 800 million. So the valuation can get lower. Now, as they continue to pay their debt of about 8 billion quarter by quarter, also their interest will decrease if they don't take on more debt. So in the long term, their earnings may increase. They may go to 850 million or 900 million. The real earnings or the real free cash flow. And then, if they succeed to increase their revenue, their growth rate from 1% to 5% or even more to develop new products, to come up with something new, then the valuation can get much higher. From 10 billion to 20 billion, around that range. And they also may start to pay a dividend. And if that happens, also the stock price will increase in the long term. So if you are planning to invest in this company, it all depends on their future growth rate. The current stock price may be cheap at the moment or quite expensive. It all depends on their future growth rate here. And for the moment, that future growth rate isn't that high. Quite flat. And if you want to invest right now, your risk of losing money is quite high. Now, don't expect that you lose all your money. Just a decline like this. Over 20% or 40%, and then in the long term, the stock price may rebound if they reduce their debt and improve their revenue. So, if you are planning to take advantage of this company, be aware of the valuation. Don't buy at the highest price, but when the stock price gets lower. when the market cap is around 8 billion. And your return will be much higher if you do that. Something like this in just a few months. That's why it's quite important to know when to buy, to get in and to get out. For the moment, Solventum won't deliver a high return because you look at their products. Here the segments and you see their growth rate. They aren't that great. And here on the right side, you see some of their products. This dressing, peel and place dressing, clear fluoride treatment, their Encompass, their system, their platform, and their filters. And you have to ask yourself if those products will be able to gain more market share. If the answer is yes, then for sure this company will grow in the future. If not, they might deliver some growth rate for some of the segments and the other will go down. And overall, the revenue will be flat. The growth rate in the revenue will be flat. So you have to be very careful if you want to invest in this company. So that's it for this video, and if you have other questions, please let me know in the comments.